All right, good morning. Hopefully everyone can hear me okay and can see the slides. Welcome to today's webinar. My name is Zach Richards and I'm a director here at DWD and I'm a member of our employee benefit plan group. Thanks for taking the time to join us this morning as we discuss the audit requirements for employee benefit plans. I know a lot of you attending today will have your first audit for your plan for the year ended December 31st, 2021. So hopefully today will give you an idea of what to expect and steps you should start taking now to make things go as smooth as possible. So here's our agenda for today. The three main items we want to address are what are the rules that stipulate when an audit's required? What does the audit process and timeline look like? And as a plan administrator, what should you be looking for when you're hiring a 401k auditor? Real quick, I'd like to acknowledge our team members that make up our employee benefit plan group. A big thanks to them for helping put on today's webinar. Our team works really hard to provide quality audits that are efficient and as painless as possible. Our firm is a member of the AICPA's Employee Benefit Plan Audit Quality Center, and we perform more than 30 audits each year. So getting started, generally speaking, an employee benefit plan is required to have an audit conducted annually once it has 100 or more eligible participants. There is a special rule called the 81-20 rule that we will talk about in a little bit. But the general requirement is 100 or more eligible participants. And it's important to note that the determination of the 100 participants is for employees that are eligible to participate in the plan, not actual participation. So your count could include many employees that are eligible, but elect not to participate, or terminated employees that still have account balances in the plan. So a lot of you may be thinking that you have more than 100 eligible participants in recent years, and you haven't had to have an audit. And the reason why you've not needed that audit is due to this 81-20 rule. So let's go through a couple of the different scenarios. The easy one is if you have 120 or more eligible participants. Under that scenario, you're always going to be required to have an audit. For plans with 100 to 119 participants, the plan is not required to have an audit as long as you filed as a small plan in the prior year. And generally speaking, if you've never had to have an audit, then you would typically file as a small plan. And if you have less than 100 participants, the plan's not required to have an audit as long as you file as a small plan in the current year. Lastly, keep in mind that the determination of the number of participants is based on the first day of the plan year. So if you have a plan with a calendar year end for 2021, you would be looking at the number of participants on January 1st, 2021. So let's assume that everyone has determined that your plan needs to have an audit for 2021 plan year. What does a 401k audit look like? Next, we'll look at some of the key items. First is the planning process. Almost all of today's audits are what are called limited scope audits. This allows the auditor to do less testing and therefore keep the audit fees lower. And so in order to do this, the auditor needs to be provided a certification of the investments. The custodian of the funds will provide this certification. And it's a pretty standard practice, but you will want to make sure that you'll be able to do a limited scope audit rather than a full scope audit. Some additional items in the planning process are year-end reports that the custodian and the third-party administrator will provide. And lastly, the auditor will provide some questionnaires that will need to be completed by plan management. This helps the auditor gain an understanding of the plan and how it operates. And the next step in the process is the initial request list. The auditor will request things such as the census report, payroll reports, And this will allow the auditor to make testing selections for the various items being tested. Once the testing selections are made, the auditor will complete a handful of different tests. One of the tests, and perhaps the most common area that has issues, is the timeliness of contributions. The auditor will look to ensure that funds are remitted in a timely fashion as required by the Department of Labor. Other areas that'll be tested are participant loans, withdrawals, and participant withholdings. One important thing to note, if you're having a first-year audit, the auditor is required to perform some tests on prior years to get an understanding that the plan has been operating correctly, not just in the current year. So while the plan may be audited for 2021, just keep in mind the auditor is probably going to ask you for some items in previous years as well. Another important part of the audit is confirmations with participants. So as the auditor, we will send letters directly to participants in the plan, requesting them to verify certain items, perhaps outstanding balances that they have on participant loans, details of any withdrawals they may have taken out, as well as participant contributions and investment allocations. And then we move into wrapping up the audit. So during the completion procedures, the auditor will provide management with a draft of the audited financial statements for their review. Plan management will sign the audit representation letter. And once that's signed, that then allows the auditor to issue the final financial statements. And also during the completion procedures, the auditor will look at any significant events that may have taken place subsequent to year end that may need to be disclosed in the financial statements. Next, let's look at the financial statements themselves. So the financial statements will include the independent auditor's report, which typically will have what is called a disclaimer of opinion. Earlier, we talked about the limited scope audit in place of the full scope audit. And since the procedures are limited, the auditor does not provide an opinion in the auditor's report. Then we have the statement of net assets available for benefits, which shows any plan assets and liabilities as of year end, and the statement of changes in net assets available for benefits, which shows the activity during the year, such as contributions, investment earnings, withdrawals, administrative expenses. And then you'll have the notes and supplemental schedules. There are some various schedules that the Department of Labor requires to be included with the financial statements if certain conditions exist. So how long does all of this take? It can kind of drag on for a while. After year end, we typically wait for the custodians and the third-party administrators to provide their year-end reports. So typically we wait until about May before we really get started in our audit procedures. Once we have the year-end reports that we need and the initial requested items from the plan administrator, we can get started on doing our actual testing procedures. And typically the audit can take about 8 weeks or so once we actually begin the testing procedures. And the main reason that this can drag on for that 8-week period generally is due to the confirmation requests that we're sending to the participants. So we send out a request to a participant. By the time we get it to them, they review it, sign it, and send it back to us. That can take a little while, but that really does provide us really good audit evidence that we try to rely on. One thing to keep in mind is that the audited financial statements have to be attached to your Form 5500 filing. So if you have a plan that's a calendar year end, the 5500 is due by July 31st of the following year. That can be extended until October 15th. So we have a lot of audits that some people want to get it done by that July 31st deadline. Some people, probably more common here in recent years, is they're not so worried about the July 31st deadline as long as we get it done by October 15th. Finally, I want to take a look at some of the things that if you're a plan administrator, what should you be looking for when you hire a 401k auditor? Obviously, the auditor needs to be properly licensed and should be independent. They should have enough training and experience to be able to properly conduct the audit. Um, but another important consideration to determine is how many audits does this audit firm complete each year? If the auditor only completes a few employee benefit plan audits per year, it can really be hard to be proficient in all of the various requirements that the Department of Labor has set up and be efficient at the same time. So what we found is that auditors that do at least 25 audits per year, they've shown to be much more proficient as a result of some DOL testing that they've done. Another key factor is whether the auditor is a member of the AICPA's Employee Benefit Plan Audit Quality Center. Those firms have shown to be more proficient in their audits than firms that are not members. So just some things to keep in mind as you're looking for an auditor to make sure that they understand the process and are giving you the proper service that you deserve. So that wraps up the items we had for today. Thanks for your time. If you have any questions, feel free to look at some of the resources on our website. You can always go to our website and find one of our team members and reach out to us. We'd be happy to answer any questions you might have. So thanks again, and we'll be in touch. Thank you.